Good morning, ladies and gentlemen, and welcome to Charts and News, episode 11. Do not forget to like, share, comment, and subscribe. We're going to have some good objective analysis today once again, because what else is new? Absolutely nothing. Silver was a trade I entered yesterday. If you watched my episode yesterday, you would know that. And I entered around this level. Yesterday, this inverted hammer was around up here when I entered the trade, and then I was profitable yesterday, but now I'm back to even. Not worried about it because it's still overbought. We still have all my indicators lined up. We have a red MACD, we have a short signal, and bearish divergence. So I'm not really worried about it. However, if I see it touch this trend line, I might get out. This was my original target, but I need to see how the lower time frames are acting. So we're gonna look at that, because if the 1 hour and the 2 hour are showing me it's oversold, then silver's just looking like a strong asset, because it is a strong asset, and long term it's my favorite asset in the world. So monitor that. We'll see. I think it's bound to test this trend line again. So yeah, that's silver. And another reason I think, well, first of all, I didn't even say this, but I think this candle is going to be another inverted hammer today. So I think it's going to end up down. Why? Well, gold. Okay, gold, same thing kind of. So it had short, it had bearish divergence and a red MACD. But now, if we zoom in, gold's MACD has recently turned green. And it just gave a long signal. Now these QQE signals have to close. So it's not going to stay long if gold goes down for the day. Why do I think it's going to go? Oh, and it has 11 hours, so it has to stay around this level for 11 hours. Why do I think that's not going to happen? Because I took a look at the hourly chart on gold, and look at this, guys. First of all, okay, we have that. That's strong bearish divergence. Plus, the RSI is overcooked to the T. This can't last. It has to go back down. It just has to. I think a day trade here shorting gold is not a horrible idea, because if you look at this hourly chart, 1858 would be a good price. The best price you could have gotten was 1865, but who knows? It might go back up. Who knows? But yeah, like this. So I'm fairly still confident with my silver trade. Another trade I made yesterday, which was bad, was this oil trade. I didn't make it at $80, like I said in the video, and I'm sure none of you guys did either, which is good because I messed up. But I did make it here because it kept failing at this white line, which is the 30-day moving average. So I'm like, okay, I feel good about this. We have a long signal, we have green MACD, and it just completely has cratered today. I guess it's because of like people are speculating that China is still going through this COVID. I can't believe people still care about that, but whatever. I mean, it makes sense for oil because it's just a lower demand for oil, which means lower prices. But like, I'm thinking more short term. So I guess, yeah, whatever. It's okay. Anyways, this is a point of support here. We have to see it break $74.48. Do I think it will? It probably could. But that will be my stop loss. Sadly, I hate doing stop losses, guys. Or I might wait for it to touch the trend line if it does, because I don't really think it's going to. I think it's bound to go up. I had my reasons to think it was going to go up. But remember, guys, that purple line's holding me accountable. I was wrong. Let's see. Let's go back in time, actually. Yeah, it was a point of support around here too. So we'll see how oil acts. Should we go on a lower time frame? Let's see how it's doing at the 1 hour time frame. Look at this, guys. We thought gold. That is as oversold as you can get. Am I wrong? So it's bound to go up at least a little bit. Am I wrong? Look at that. It's testing this previous point of support too on the 1 hour chart. So yeah, I'm not panicking about either of those trades. And when it comes to silver, I'm actually even. So I'm definitely not panicking. So oil's fine. Natural gas, guys. Yesterday I said I hope it enters a chop block. And we have 0.15% gain today. It's a very small candle compared to what we've previously seen. Let's hope that it chops around here and the MACD rolls over while the price barely moves. That would be miraculous. Perfect time to go long. We get a long signal and we just go in. That would be beautiful. Natural gas, cheap, extremely cheap. It's actually near the 52-week lows, which is 3.78. And it's touching this previous point, which is like a big supply zone. Or is it demand zone? Sorry, yeah, demand zone. Or previous point of support. So this area. Yeah, so we have to see how it acts in that area. I genuinely think it's going to chop around. It could be a good time for sideways traders to get into natural gas. Up, down, up, down, up, down, up, down. Anyways, we're going to look at some tech stocks because the indexes are not... They're just not moving. All three indexes are in like their bear flag area and they're just chopping. So let's look at the biggest movers of those indexes and see what they're doing. Apple, it's not clear, guys. I mean, like what? We have a red MACD, we have a short signal. It's been short for a while though. And we have bullish divergence. It's still neutral. This red line though is the neckline on a head and shoulders pattern. And we have the Fibonacci there. I mean, like, there's nothing clear here. Amazon, I talked about yesterday. We have to keep monitoring Amazon. We are monitoring Amazon. Yesterday was a red day for tech stocks, but I told you guys keep an eye on Amazon. It looks too oversold and it looks bullish, and it's up 2% yesterday. So even though tech stocks went down, I was right about Amazon. It's up 2% yesterday. But like I told you guys, it wasn't sure because the MACD is kind of neutral here, and there's a short signal. But that bullish divergence is unbelievable. So keep watching Amazon. It's still below the 30-day moving average. If it's going to fail anywhere, it's probably going to be that white line right there when they meet. If they meet, that would make sense to me. And then Tesla is also a big mover. But it's kind of in the same position as Apple. Broke this key level. But, like, here's the thing with Tesla. These two white lines was a chop block in 2020. See? So we'll see. I don't think it's going to break it. Especially after we're seeing this bullish divergence. And the MACD looks like it's about to cross over. So, we have to keep an eye on Tesla as well. But, that's it for charts. Let's hop on to some news. U.S. regulators warn banks over cryptocurrency risks. Guys, U.S. regulators, that's like the SEC and lawmakers and whatnot. They don't, I mean, like, look, crypto is decentralized. It's unregulated, but you can hold it on, because it's a blockchain thing, guys. It's on a computer. You don't have to be exposed to the exchanges. Right? Like, you can hold it on a ledger. And that's a decentralized asset, digital asset. We're moving digital. You guys need to look into this. Bitcoin, XRP. I love these assets because they're going to skyrocket one day. By 2030, these assets are not going anywhere. Yes, okay, you're going to hear some old guys or older generation, I should say, oh, okay, these are Ponzi schemes. The actual coin isn't a Ponzi scheme. The exchanges are Ponzi schemes. The stable coins are Ponzi schemes, okay? You need to do research on the coin you're investing in. And plus, the banks are as risky as it gets. You are putting your worthless fiat currencies into an account, and they don't even... Okay, look, the problem with FTX is that Sam Bankman-Fried was using customer funds. It is widespread knowledge that banks use customer funds. All of it. They don't use 90% anymore. They don't use 95%. They use all of it so they can grow the money supply into infinity. The U.S. regulators need to worry about the banks, not the cryptocurrency. They need to worry about the banks, but they don't. You know why? Because the banks haven't bought out. They don't care. Oh yeah, just give us the money, and then we'll make sure you guys can do all your illegal white collar crime. Do not trust bankers, and they can print money out of thin air. You guys need to get some gold and silver. I was telling my friend the other day, right? I'm like, okay, you want to know why I like silver so much? I want you to just think as simple as possible, okay? You can either have the $24 US that an ounce of silver costs, that a bank in central banks can print out of thin air, meaning there's basically an infinite supply and it's basically worthless. Or you can have something that needs to be mined, that is finite, right? And he's like, oh, but it can be chemically enhanced or processed or whatever. And I'm like, those chemicals are finite. It can't just be printed out of thin air. That's the point. It's something valuable, okay? And this made me laugh. So Miles Udland, whatever. Sorry if I butchered your name, but you butchered this article. Stocks usually go up. Just make sure to give it 20 years. Okay, cool. Now, you guys are really underestimating the massive bubble that's been created. Okay? Look at this. This is the Japanese stock exchange. And this was, 34 years ago. Wow. And by the way, it was at 35,000 34 years ago. Now it's at 25,000. So, I mean, like, you can't just sit here and say, oh, buy and hold, buy and hold, buy and hold. That's not how it works, guys. That's how it works when we live in a stimulated, fake fiat economy of money printing. And we don't. I mean, we do, but, like, it's not going to be much longer. And I want you guys to realize something. Stocks will go up. Okay, stocks will go up. And I want to explain why. This right here is the 10-year yield. And when this goes up, the bond market is in trouble. And that's why it has done nothing but go up all year. I mean, it's been going down, relatively going down for the past couple months. But all year, it went from like 1.7 to around 3. It's been going up, right? Well, the government will, and when this goes up, I should add, when this goes up, the currency gains strength, okay? But the economy hurts because this is going up. This is the economy. When this goes up, it hurts. When this goes down, the economy's fine. So it's like the government has to choose. Do they want to devalue the currency or do they want to devalue the bond market? And you can look throughout history. Every single time they choose to devalue the currency. So they're going to like stimulate the economy into infinity just to keep the bond market afloat. That is hyperinflationary, and it's not. They can't do it forever, but eventually, give it like 5-10 years, this ticking time bomb will just soar beyond belief. Like, you will see this thing go up 30, 40, 50 basis points a day, and that's when you know it's over. It's over. You'll see havoc on the streets, looting, riots. People will be broke, just beyond belief. Every bank is toast. It's gone. Okay, but they're going to let hyperinflation happen before that because it's just always what happens throughout history. That's why you need to have gold, you need to have silver, you need to have real assets, not the horrible fiat currency that they can print into oblivion. I mean, if you don't even need to understand economics. Why would you want something they can print? They can make it for free and you have to work for it. At least work for something that is finite. It's just common sense to me. But anyways, guys, I hope today was insightful. I hope you guys can like, share, and subscribe. Peace. I love you guys.